Hi, everybody. I'm Junichi Kubo. I've worked in the financial industry for 30 years and many times dealt with the trust as the trustee, the settlor, and the beneficiary. Today, I would like to talk about Securities Investment Trust, a very popular collective investment scheme in Japan. Securities investments are often employed to build up assets for the future, but there are many securities and many corporations issuing these securities. You want to start, but you may not be so sure about what to do. To start securities investment, they say you will have to do the following. It looks tough. Then it may be appealing to you to have an investment professional handle your securities investments. First, you will deposit your money with the investment professional. Then the investment professional will invest your money in securities for a certain period. At the end of the period, the investment professional will convert the investments into cash and return the cash to you. Of course, you have to pay fees to the investment professional, but you can build up your assets through securities investments without effort. However, you may be afraid that the investment professional, tempted by an evil spirit, would steal or embezzle the deposited money or securities. Or you may be afraid that the investment professional would become personally liable for large debt and his creditor would take away the deposited money or securities for collection of the debt. But you would feel comfortable if this is the case. The investment professional, soon after he receives money from the investors, entrusts the money to an asset administration professional. It makes the money the trust property. The investment professional, the titular of the trust. The asset administration professional, the trustee. And the investors, the beneficiaries of the trust. Then, the investment professional instructs the asset administration professional on investments of the trust property in securities. The asset administration professional buys and sells securities in accordance with the instructions given by the investment professional. Here are the reasons why you should feel comfortable. First, it is the asset administration professional as the trustee, not the investment professional, that safekeeps, administers, and disposes of the money and securities. Which means the investment professional cannot transfer the money or securities as he likes. Second, the money and securities are the trust property of a trust, the beneficiaries of which are the investors. Which means creditors of the investment professional cannot collect his personal debt from the money or securities because of the independence of trust property. Here is the basic structure of the securities investment trust. Appearing on the chart are the investment trust management company, the trust bank, and the distributor, such as securities firms and banks. These are the main functions of the investment trust management company. And these are the main functions of the trust bank. The distributor provides, at the request of the investment trust management company, these services. A securities investment trust is established in the following steps. First, the investment trust management company determines the investment targets, investment policy, and other specifications of a new securities investment trust based on the economic conditions, investors' preferences, and so on. Then, the investment trust management company prepares a securities registration report, which contains important information about the Securities Investment Trust and conditions of beneficial interest issuance, and file the report with the government. The Investment Trust Management Company also prepares an investment trust deed, which provides for key factors about the trust, such as the rights and obligations of the settlor, the trustee, and beneficiaries, and negotiates and executes the deed with the trust bank. In addition, the investment trust management company prepares a prospectus and other materials which provide the investors with information necessary to make an investment decision. And distributes the prospectus and other materials to the investors directly or through the distributor. Investors who decide to invest in the Securities Investment Trust apply to subscribe beneficial interests directly or through the distributor by depositing subscription money with investment trust management company. As in the case of investor A, some investment trust management companies directly distribute beneficial interest to investors, but many others do it utilizing the distribution network of the distributor, as in the case of investors B and C. The investment trust management company entrusts the subscription money to the trust bank. Now, a trust is established, and the investment trust management company becomes the settlor, the trust bank the trustee, the investors the beneficiaries, and the subscription money the trust property. Investment of the trust property is made as follows. The investment trust management company gives instructions to the trust bank on which issues of securities to buy or sell, when and how much, and other matters relating to the trust property investments. Pursuant to the investment targets, investment policy, and other specifications of the Securities Investment Trust. The trust bank conducts securities sales and purchases and other transactions in accordance with instructions given by the investment trust management company. When the trust property generates a profit, dividends are paid to the investors as follows. Please take note that some securities investment trusts do not distribute dividends and reinvest the profit in securities. When the dividend payment is made, The investment trust management company instructs the trust bank to disburse the amount of money equal to the dividends. And the investment trust management company pays the dividends to the investors directly or through the distributor. The investment trust management company reports the investors on investments as follows. First, the trust bank reports the investment trust management company on the status of the trust property. The investment trust management company prepares, based on the report from the trust bank, an investment report which contains the analysis of investment results and the description of the current investment strategy. And delivered investment reports to the investors directly or through the distributor. The investment report is one of the materials for the investors to determine whether to continue or stop the investment in the Securities Investment Trust. Generally speaking, investors can purchase beneficial interest of the Securities Investment Trust when they want. When investor B purchases additional beneficial interests, the purchase is made as follows. Investor B requests purchase of additional beneficial interests to the distributor, designating the number of beneficial interests or the amount of purchase. The distributor informs investor B's purchase request to the investment trust management company. Investor B deposits the purchase money with the investment trust management company through the distributor. The amount of the purchase money is calculated based on the net asset value per beneficial interest on the day of the purchase request. The net asset value per beneficial interest is equal to the amount of the net asset value of the trust property of the Securities Investment Trust divided by the number of beneficial interests issued and outstanding, and publicly announced after the close of trading of the request day. If investor B designates the number of beneficial interests to purchase, the amount of the purchase money is equal to net asset value per beneficial interest multiplied by the number of beneficial interests. If investor B designates the amount of purchase, the number of beneficial interests purchased is equal to the amount of the purchase divided by the net asset value per beneficial interest. The investment trust management company entrusts the purchase money to the trust bank. Generally speaking, investors can stop investment in the Securities Investment Trust when they want. Investor C stops the investment as follows. Investor C requests the redemption of the beneficiary interest to the distributor. The distributor informs Investor C's redemption request to the investment trust management company. If Investor A wants to redeem the beneficiary interest, Investor A would request directly to the investment trust management company. The investment trust management company calculates the redemption proceeds based on the net asset value per beneficiary interest on the day of the redemption request. The investment trust management company instructs the trust bank to disperse money in the amount equal to the redemption proceeds. If there is not enough money in the trust property, the investment trust management company takes necessary action, such as instructing the trust bank to sell part of the trust property. And the investment trust management company pays the redemption proceeds to investor C through the distributor. After receiving the redemption proceeds, Investor C is no longer a beneficiary of the Securities Investment Trust. Here, I would like to briefly explain regulations applicable to the Securities Investment Trust for the protection of investors. Two kinds of regulations apply to the investment trust management company. One is the regulations under the Act on Investment Trusts and Investment Companies, which regulate the establishment of the Securities Investment Trust, such as the structure and governance scheme, and investment reporting. The other is the regulations under the Financial Instruments and Exchange Act, which regulate issuance and offering of beneficiary interests and investment instruction of the trust property. The trust bank is subject to the regulations under the Act on Engagement in Trust Business by Financial Institutions and the Trust Business Act. The activities of the distributor are regulated by the regulations under the Financial Instruments and Exchange Act. Before finishing this presentation, I would like to note points to remember about the Securities Investment Trust. First, You can utilize the skills and expertise of professionals. You leave your securities investments to the investment trust management company, professional in investment, and the trust bank, professional in asset administration. Also, you can diversify your investment portfolio, even though your portfolio is not so large, because the prices per beneficial interest of the securities investment trusts are fairly decent. You can invest in various securities investment trusts with different investment targets and/or investment policies. In addition, it is convenient to either start or stop investment in the securities investment trusts because, in most cases, you can purchase or redeem beneficial interest of the securities investment trusts at the time you like. Purchases and redemptions of beneficial interests are at market price, namely the net asset value per beneficial interest of the securities investment trust at the time of the transaction. But either the investment trust management company or the trust bank does not guarantee the investment principal, although they try to prudently invest or administer for the investors, which means you directly take risks associated with securities investment. Besides, you bear extra costs as you utilize the professionals, compared with the case where you yourself make investment judgments and administer your investment assets, which may result in a lower return of your securities investments. This concludes my presentation. Thank you for watching.